All right, you want to trade ETFs? There's a whole new way to do it, and it's commission-free. Let's find out more. We have Kathleen Murphy, the president of personal investing at Fidelity. Kathleen, good to have you with us.
Thank you very much.
Explain this this new arrangement that you have with BlackRock and their iShares ETFs. I think there are about 25 of them now that are going to be eligible beginning tomorrow,
right.
eligible for trading on the Fidelity platform. What, commission-free?
Commission-free. In fact, we have two great announcements today that will benefit millions of retail investors. First, in terms of the ETF partnership we have with iShares and BlackRock, we entered into a unique partnership with them to offer 25 of the iShares ETFs commission-free. And this is a comprehensive suite of ETFs that really cover all the various equity indices as well as bond funds and international funds. So it's a great portfolio of ETFs, some of the most popular iShares ETFs. So what we've decided to do as a leader in the mutual fund business, a leader in the brokerage business, partner with the leader in the ETF space, and we think it's the best deal on the
market. So they're commission-free.
They're commission-free.
And then you've also, the second thing is I think you've lowered the commission, right? Is $7.95 is the commission price point?
That's right. So for anyone that trades on our platform, the price is now $7.95, one low flat price for everybody, and it's the lowest price among the major online brokerage firms.
All right, now that commission price, that $7.95, that's just about 5 cents lower than the $8 price that was already available to the platinum or the highest trading, the volume traders.
That's right, but it's a 60% reduction for customers that were in that didn't trade quite as much. So we've moved to one flat price for everybody, very simple, eliminated per share charges even for the gold customers. So the combination is, get a great deal in terms of the commission cost, but also everyone can also trade these ETFs commission-free.
What have you been seeing in terms of volumes, at least from the retail side of the business? Because, we've heard that many investors, they've really been moving their money into bond funds. They've been issuing the equity investments, and they've not been buying any stocks. Is this something that you've seen as well?
So we've seen a couple of things. First of all, with our more active investors, they've been very active in 2009. In fact, we had a record trading year for them. So they're very, as I said, very active, like volatile markets. In terms of sort of the investors that tend to be less active, a couple of things. First of all, ETFs have grown in popularity, but still off a small base. Another thing we've seen is people have moved more into sector funds. And so we've got, in fact, 9 out of our 10 sector funds actually outperformed ETFs. So some people are much more comfortable with sector funds, and then others are staying in the bond funds, or at least having a portion of their money in the bond funds because they want to invest more conservatively.
Do you see this competition between, let's say, ETFs, which are kind of an index product?
That's right.
They're not actively managed. So do you find that there is almost like a competition between the actively managed products, which Fidelity really has been known for with a lot of its Magellan mutual funds, the actively managed products on the one hand, and then those passive index-style products, which really characterize the ETF world?
Yeah. What I would say is there's a real spectrum here. So, and there's some cycles, but I think there's a lot of choice for lots of different types of investors. On our platform, ETFs are about 3% of the assets on our platform. So again, growing tremendously, but off a small base. The bottom line for Fidelity, we offer over 10,000 mutual funds from over 400 different providers. We want to make sure we offer the maximum choice at the best value for our customers.
One of the other things I think Fidelity has recently done is you've introduced international trading, international equity trading to the retail base. How has that performed right now, and where are you seeing the greatest activity? Maybe is it Canada? Is it the UK? Where are you seeing the activity?
So we, again, a leader on that one as well. In the fourth quarter, we announced that you could trade in 12 different countries, 8 different currencies. We've seen probably the most interest in Canada so far, but we expect more interest in some of the other countries, including the Asian countries, as time goes on.
What about currency trading? Because I know that you've got to do some conversions. If you're going to actively be trading the real markets overseas, whether it's Canada, you've got to trade into the loonie, or the UK, you've got to make those currency transactions. Are you seeing more of those as well?
A bit more, yes. And certainly international trading has become more interesting in light of the relative value of the dollar.
Now, when you talk about ETFs, just to go back to that for a second, we've seen a lot of controversy having to do with the turbocharged ETFs. These are, the bear, the bull, the 2 times, the 3 times. Are you finding investors getting a little smarter about that and learning a little bit more before they take the plunge?
Absolutely. And And in fact, we took action last year to make sure that investors were better educated before they bought those leveraged funds. So we make them sign a disclosure document to make sure that they're very aware of the risks of those. But after the regulators started to focus a little bit more on those, we have seen the interest in those decline a bit. And I think there really are for very sophisticated investors that know what they're doing.
All right. I want to thank you very much, Kathleen Murphy, the president of Personal Investing, coming in from Fidelity, sharing some insight into a whole new range of trading for ETFs, commission-free, those iShares from BlackRock. Thank you very much. Appreciate it.